Talk us through it. Surprised by the scale of today's move?
It's a big move in oil, but let's put this in perspective. When Saudi Arabia takes such unilateral and pretty dramatic action, they're doing it in response to problems with demand. Global oil demand started to recover very strongly last summer after the first wave of lockdowns expired. But then in the last 6 months, it's been, frankly, flattened down. Particularly in Europe and North America, there's been some upward movement in Asia, but across the Northern Hemisphere, it's really been a very difficult winter. So Saudi is reacting to these demand headwinds by trying to cancel them out through a reduction of supply. Unfortunately, that's not something that they can do forever, right? They need the revenue. So ultimately, the only sustainable and lasting solution to the difficulties of the oil market that COVID has created is to vaccinate billions of people around the world. And of course, that will take time.
But it's one reason that investors, not just on the price of oil, but on some of these energy companies are optimistic. The group up 5.5% today in the S&P, up 32% over the last 3 months, Pavel. Is it a buy still? I mean, it's still down sharply if you look year over year, but it has had a nice comeback on some of that optimism.
That's right. Look, this is the reopening trade, and we've seen this since the vaccines began to be announced about 2 months ago, as you mentioned. The good news is for energy investors, there is running room left, right? It is a question of timing. We think that oil prices will be above $60 a barrel, but only in the second half of this year. But as far as the stocks themselves, last year, energy underperformed the S&P 500 9 out of the last 11 years. So to say that the group is beaten down, contrarian, is an understatement. This is the worst performing sector of the market by far in the last decade. So looking at the last 30 days gives you a little bit of perspective, but the fact of the matter is it's been a lost decade for the sector. So plenty of room to play catch up.
And what would you be buying then?
Well, last year, on average, oil and gas stocks were down, 30%. So, just to get back to where they were January of 2020 pre-COVID, you'd have moves of 40 to 50%. Large caps, names like Chevron, BP, Pioneer Natural Resources, in the pipeline sector, Energy Transfer, Williams, Kinder Morgan. These are some of the blue chips that are, in many cases playing the role of consolidator in the industry. But to be blunt, all of them trade in tandem with the commodity itself, the underlying commodity market.
Shepard Smith here. Thanks for watching CNBC on YouTube.